Hi, I'm Chris Days and I'm the founder of GoMortgage, and I've spent over 22 years helping homeowners across the UK buy their dream home, even if they thought it wasn't possible. At GoMortgage, we keep mortgages jargon-free, simple, and totally tailored to you. Whether you're a first-time buyer, have bad credit, and self-employed, or just generally want to know how things work, we're here to guide you from scrolling Rightmove to getting your keys. I'll be sharing real client stories, insider tips, giving you straight talking advice, no fluff, no nonsense, just what you actually need to know. If that sounds like your kind of mortgage advice, hit subscribe, drop me a thumbs up, and let's get things moving. When we talk about bad credit or adverse credit, what does that mean? People sometimes get confused. So, just to list what all the different things are, and then I'll explain it in more detail. Typically, when we talk about bad credit, we're looking at what is on your credit file, and bad credit is going to be things that are happening on your credit commitments. So, that could be things such as a missed payment, a default, a CCJ. You could be in a debt management plan or an IVA. You could have previously been bankrupt. You could be in a debt relief order. So, what are all these things? So, missed payment. If you've got a credit card and you fail to meet your monthly commitment, whatever that may be, you would get a missed payment on your credit file. It would go down as a late or a missed payment, a status one. Status ones go to state all the way up to status 6. So basically, if you've missed 2 payments, it'd be a status 2, 3, 4, 5, 6 onwards. Once you get to a status 6, you might find that the provider, so let's just say you've got a Halifax credit card, Halifax might go from a status 6 to giving you what's called a default. So default is when that credit commitment, the account goes into default because you've not been paying the payments. That's when the bank or the lender might pass your account to a debt recovery agency to try and recover that money. So your missed payments turn into a default. CCJ. So CCJ is also known as a county court judgment. It's not also known. That's what it stands for. It's a county court judgment. Now, one of the biggest ones that we get for CCJs is parking tickets. People who get a parking ticket don't pay it because they think, oh, it's just a parking ticket. That company then issues you a CCJ. It gets registered with a court, and you then have a CCJ on your file, a county court judgment. Now, again, the only way to get a CCJ off your credit file is to apply to the court and get it removed. You can't just pay it and then it's done. If you pay it, it will go as satisfied, but that doesn't really, well, it makes a bit of a difference, but the CCJ is still on your credit file. All these things remain on your credit file for 6 years before they drop it off. Debt management plan. So debt management plan is where you come to sort of an arrangement. You're struggling to pay back all your credit commitments. You might go into a debt management plan, which is an arrangement to pay with the individual lenders and providers. So you might pay a certain amount back each month. If you're in a debt management plan, it's going to be difficult to get a mortgage. An IVA is similar, but it's an involuntary arrangement. Again, if you're in an IVA, you're not going to be able to get a mortgage until the IVA is satisfied or completed. Bankruptcy. So if you own a property, bankruptcy and repossession. We'll do bankruptcy first. You might go bankrupt, and that's basically where you get everything taken off you, everything's squashed, and for a good year or so until it's satisfied, you're not going to be able to do anything until you're out of the bankruptcy. And then once you're out of the bankruptcy, your credit is going to start then improving bit by bit. A repossession is where you get a property repossessed, and again, very hard to then get another mortgage after you've had a repossession, based on the fact that any lender that sees that you've been repossessed previously are going to have, you're going to be high risk to that lender based on the fact that you've already had a repossession. So a good amount of time is going to have to pass before any lender is going to look at you, typically a good 3 to 6 years. So all these bits that we've just been through are all what we regard as bad credit or adverse credit. These all have an impact on what you can do lending-wise when you're trying to get a mortgage in the UK. If you need any help because you've got any of these things and you're looking to not buy a mortgage, but you're looking to get a mortgage and you've got any adverse credit, please feel free to drop me a message. If you found this helpful, hit like and subscribe, and share this video with someone who's looking to buy their next property.